What's going on, family? How are you? How are you? How are you? How are you? Happy Sunday to you. Happy Sunday. Another Stock Sermon Sunday. We're here live, going to be going over the markets, going to be going over what's happening for the week. And during these segments as of late, since we're entering into our June, July, August segments of these Stock Sermon Sundays, I'm going to be giving more ideas for longer term ideas such as share buying, also as well as swing trade buying. So enjoy your summer. I know some of you have kids and your kids are out of school and you're hanging out and you're going on vacation, relaxing, barbecuing, whatever it might be. But the markets are still open and you can still have opportunities to generate some income and also grow your portfolios as well. And for those who are not actively investing, you can manage your portfolios too. So welcome everybody. Hopefully you're doing well. If you can comment down in the chat, that'd be wonderful. And kind of give you a game plan of tonight. We're going to be going over our earnings for the week, as well as our economic data. This is a big week for economic data, which is going to be our CPI and PPI news, as well as FOMC, which is going to be approaching next week. So these next 2 weeks, approaching the end of June, or I should say the third week of June next week, we have a lot of important data that will be signaling whether the Fed is going to cut, whether we're bullish through the summer, whether we're kind of iffy going back and forth. But right now, I would say we are having a lot of bullish strength, bullish consolidation. But there's some wrenches that have been thrown in, right? We've got the Elon and President Trump beef. We've got distractions going on. So we'll go through all those today. So if you can give me some chats down below where you're tuning in from, would love to hear you. And I'll go ahead and get this out of the way, right? The little promotions and little things I've got to say just because of my time that's being given here. And I appreciate those that are showing up and giving up of your time because you could be anywhere else. If you want to join Leverage University, I have created now on these Stock Sermon Sundays a 3-day free trial link. Okay. A 3-day free trial link. I'll put it in the chats. I'll also, if you DM right now, free trial, and also follow DM right there on the screen, Dr. McElderry. Go ahead and DM that if you're not inside of Leverage University and you want that special link. That'll be available for our Stock Sermon Sunday members, all right, that come here on and give up all their time. So that's a 3-day free trial link. If you have any friends, family members, anybody like that, and you want to message myself, I may put it in the chat as we go, but go ahead. The Instagram and or Twitter is right there. Okay, if you got Facebook, you can, if you're old school, got Facebook, you're more than welcome to message me there. But all of my links will be down always in the description of my videos post the video. All right. So I'll go ahead and make it known there. Okay, 3-day free trial into Leverage University. And then following that free trial, there might be a little discount code to get you continued access into it. So no pressure, no nothing. But I know a lot of people have been interested in joining our extensive community outside of here so you can learn, be educated, and get some ideas on how to not only have entrepreneurial dreams and goals and other financial ideas, but the trading floor. All right. So appreciate y'all. And also I want to thank those that have used some of the links down below. All right. So congratulations to the free stocks that you've gotten for downloading Webull, depositing some money, any amount of money. I do believe, I think it's minimum $100 or maybe any amount of money, but congrats for those who have gotten your free shares on downloaded the Webull platform through the link below. That is the brokerage that you see me charting on. I do have videos on here, and a lot of people already have Robinhood, but if you don't, you're welcome to use that link down below. All right. So without further ado, okay, we'll get right to it. And yeah, let me check chat, see where everybody is tuning in from. And also I like to give a little bit of time for people to kind of trickle on in, and welcome to those that are new to the platform as well. All right. New to the platform as well. What's going on? What's going on, Trent? How are you? How are you? How are you? Alrighty. Alrighty. Let's jump right into it. I'm going to share my screen here and we'll get right to the business. All right, there we go. All right, first order of business. I'm going to shout out my community members here in the community for some of our trade wins that we've been having. So since Trent commented right there, he is a member of Leverage University, right? He's been a long-time investor. I'll talk about crypto as well. I know some of y'all are wondering, hey, some of these altcoins, Brian, can we talk about some of those as well? I'll mention some of those, the XRPs and things of that nature here. And where they may be going, but levels are still the same. As long as XRP is holding above $2, goes to $2.30, and it needs to get back above that $3, then we can start looking at that $5 plus range in the short term. All right. So congratulations to Dreama for 38%. All right. Also, congratulations to Trent as well for that 30. I believe it was 20 something percent or whatever. It was a 20%, 30%, 40% trade that we took on SPY on Friday. Very easy. It took a little bit longer than I wanted to. The market was just consolidating and playing games again in another range, right? But congratulations. We took about a 30 to 40% trade on SPY. Also, congratulations to Ben as well. He's an equity trader inside of our community. So congratulations to him. Trades equity primarily, some options, but primarily equity. So congratulations to him. And also big congrats. We do trade futures as well in the community. To Lloyd. Okay, so Lloyd. Also praying for Lloyd as well. He does have to have some procedures being done this summer. So Lloyd, if you're rewatching this or listening to this, prayers up to you, also your family, your kids for this summer and healing. But he has, I wouldn't say mastered, but he's found a system. All right, he's found a system, and that system has allowed him to be successful. As you can see right there, that P&L on our futures platform, and the futures brokers that I use down below is affiliated as well, where it will give you some percentage off. So appreciate those that are using that link. The code is Dr. B, DRB. All right. So $950, $1,100, $100. So Lloyd is up for his payout pretty soon. I believe he just needs to get his consistency down a little bit, but he is right in that payout range coming shortly. All right. So when you're a leverage graduate and you stick to the teachings of Dr. B and learn the disciplines, the results will come. Thank you. You're so welcome, Lloyd. That is all you, man. I appreciate it for allowing me to teach you and steward and all those good things. And yeah, on the educational side or the teacher side or the I guess the coach consultant side, it does become difficult sometimes. Because when, as many of y'all know, if you are a professional in your respective right, whatever you do, it took a certain amount of time, lessons, frustrations, anger, damn near quitting, things of that nature to get to where you are, right? So it's the same thing when it comes to any skill set, entrepreneurship, trading, business, so on and so forth. So those that stick it out, those that show up consistently, those that try to ask the right questions, it's not that the things don't work, right? It's little bitty kind of beginner mistakes that you, even myself, resort back to, whether it's I'm in my own head, I'm in my own way, I didn't take profit, I didn't set my stop loss, right? I got a little bit too greedy, I was a little bit too fearful. Like these emotions come up for everybody. So the more consistent you do it and figure out your strategy, you will start to see the light, so to speak. It will become easier and easier to do. All right. There's a nice trade we took on Amazon. So just shouting out all the wins channels here, and transparently, we do share any losses that we take. So I am transparent about that if I do take a little loss or have to stop out, whatever it is, I do put that there. All right. All right. So let's go into our earnings for the week. On the docket this week, we're starting to round out kind of the end of the big earnings season, starting to come into CPI reports, FOMC meetings, and our next big earnings season, if you want to put on your calendar, is going to be starting towards the end of July. That is when the next big tech earnings round comes up towards the end of July. So I think it's July 20th week. So if you want to put that on your calendar, that is the next big week of earnings that is coming up when we're having the Apples, the Microsofts, the Amazon, so on and so forth. It's coming up towards the end of July into the early August time. So that is our next kind of big earnings anticipation for another month coming up, or excuse me, another quarter coming up. All right. So you can see here it's getting less and less on the docket. Nothing really big on earnings other than paying attention to a couple of names, which I'll be looking at: Chewy, Oracle, Adobe, and RH. All right. Chewy, Oracle, Adobe, and RH. Stitch Fix, supposed to be having a decent move there, but nothing that I trade on a regular other than maybe Oracle. Sometimes it does have some movement, but other than that, nothing big to write home about, other than to pay attention and see if there's any post-earnings moves. For anyone in Leverage University, I'll take a look and see if there's any lottos. I know we missed the Lululemon lotto last week. See if there's any lottos that are worth it. Okay, so I will check that out based on the expected move. Okay, expected moves here. We've got some big ones, Stitch Fix. You can see there about a 20% move. It is a penny stock, quote unquote. Adobe's always a big mover, but it's a little bit spready. Chewy, decent mover, about 10% plus. So Oracle, typically around that 8 to 10% or so sometimes. So might be some movement, but other than that, nothing to write home about, like I said. Okay. On the earnings docket, excuse me, the data, excuse me, the data. We've got data here. We've got wholesale inventories on Monday. So anytime, again, as a reminder, I know I've got newbies that come sometimes on. I'm not sure who's showing up right now, so I just want to address anytime there's 10 a.m. data. Okay, that is an important day to pay attention to, where there'll be some volatility or somewhat of an interruption. So this is pretty much, as I call it, free. FREE, free Monday, meaning there's not much interruption other than this 10 a.m. data. So it should be some decent volatility. However, as you can see here, Wednesday and Thursday, we've got CPI and PPI. So as a reminder, for those that don't know how CPI and PPI weeks go, typically what happens is you have some profit taking into those days. Okay. So Monday, we might make a bullish move. We might try to continue to push up because we are in a bullish trend. We have reclaimed a bullish market. So we still might continue to grind our way up, or a pullback and a grind up. It may chop sideways. Don't know yet. On Tuesday, I do expect probably a little bit of profit taking from the bullish run that we've had the past couple of weeks. Okay, because going to CPI, PPI, typically there's a little uncertainty. So it can be choppy. There might be some profit taking. There might be some just low volume coming in. So we don't want to get, too chopped up. We want to make some money potentially tomorrow at the beginning of the week, lower our risk, look at some opportunities maybe on Tuesday, and then kind of have a cushion, as we say, right? That's the best way as far as like trading the week goes, is kind of get some green in on Monday, green in on Tuesday, take some nice opening week trades, and then wait for the data to report at 8:30 Eastern Standard Time, an hour before the market opens. And then we get a direction of the market, and then the volume will pick back up. All right. So Wednesday will be our good trading day, along with Thursday as well, with initial jobs claims and PPI. Okay. For any of my futures traders, as a reminder, okay, I know I have some experienced folks that trade futures that rewatch this or watching it live. If you can catch a move pre-market, great. But ideally, it's better to just wait for the New York session to open. After this data has reported, trade it normally as you would a New York session, waiting 5 to 15 minutes into the new market, which is around 9:45 or so on Wednesday and Thursday, and then trade that volatility coming into those days. Okay. I can tell you from experience, to be transparent, I have passed prop firm challenges. I have made good money on these datas, but also I have lost a lot of money in futures, so to speak, by trying to mess around an hour before the market opens. All right. So just letting my futures folks know that. For any of my options people, nothing's changed for us other than just wait for the market to open at 9:30 Eastern. All right, we'll know a movement. There'll typically be a gap or a continuation, or if the data is good, we might continue to grind up. All right, so Friday, also a good day to trade once we get direction here or whatnot, because we got that 10 a.m. data, which is our consumer sentiment, and this is just a prelim right there. Coming next week, okay, you can see right here, FOMC. So ideally, what I've been, I'll show you just in a second when we jump on the charts, what I've been looking at to make this week easier. Okay. If you notice from my Leverage University members, students, clients, I started to move the contracts further out for some of even the day trades. So like on Friday, sometimes I trade zeros, but I wanted to just chill on Friday. So I moved it to a Monday, and some of you chose a Tuesday contract, right? I'm kind of starting to look out towards the June 20th contracts for even day trades. Okay. So some things, they're a little bit pricier than others, but there could be some big moves coming up, a lot of volatility, and you don't want to run out of time necessarily. Now, as you know, for my live trading inside of the community, which I'll be active this week on, we want to make sure that things can change, right? I had to change the game plan on Friday because we gapped up. right, in the morning, and I wanted the upside move for options, and it already made the move. So I had to change the game plan and trade puts at the top and just kind of get out, right? So the game plan could change throughout the week. I'll update continuously. For those that are still on YouTube, right, you're more than welcome to check out the community, check out the university. Remember, if you're just joining in late, there's a 3-day free trial that I'm going to start offering here. Just message myself on my Instagram that is right down below, and make sure you hit that follow on Instagram. Just say, hey, free trial, I was on your live, or whatever it might be. Just message me there. All right. Cool. Let me check the chat. Check chat. Make sure y'all are good. Everybody's good. Good evening. How can I get the 3-day trial? Money Codez. Do you see my Instagram right there? Money Codez. What's going on, man? How are you? Do you see my Instagram right there on the screen? Dr. McElderry. If you have Instagram or Twitter, you're more than welcome to just DM and just say, hey, free trial. Free trial. I was on your stock sermon Sunday. Cool. We'd love to have you inside. All righty. Cool. Let's keep rolling. Let's go into the charts where the money is made. I've got my core list set up right here. Okay. We always start at the top on SPY. A lot of people have been asking, also about, the organization of my charts. I color code these myself. I have all different types of watch lists here that I segment. I created these watch lists based on different sectors, things I want to watch to keep organized: financial, healthcare, small caps, semiconductors, just to kind of see how the sector moves. I even have sector ETFs so I can see how the whole sector moves. All right. So these are things that you're more than welcome to, copy if you're inside the university. But as far as on YouTube, it would take a whole video for me to go and show you what to add to here. So I'll keep this for my Leverage University members if y'all want to copy my watch list. But my core list is the main thing I look at for that particular week. And I kind of segment it to the major movers, whether it be positive, bullish movers or fairly weak movers. I color code it based off, my sectors here, right? So SPY, QQQ, IWM, SMH, and then my main watches are in blue. And then kind of my swing trades or things that I'm looking a little bit maybe further out that might have some big movements or have come in and may have some attention on them. UNH, Lululemon have gotten beaten down. I need to put NVO on here as well, and Merck. Then I'll move those down and we'll get right to it. So you're seeing me in action, how I typically do it. I think that's a lot of questions that I get is how is your process of organization, or, how do you keep yourself organized with so much going on? All right, let's go into SPY analysis here. I've got some levels charted out. And if you want to follow me along with your charts, I'll give it a little second here to bring your charts up. Okay. And if you're on Robinhood as well, Robinhood Legend, I always have that up if you can see there, right? So Robinhood Legend is up, but it looks the same. So if you are on Robinhood Legend or came from my Robinhood Legend video, it's the same thing. I go back and forth between. I just personally like Webull for my charting. And also I do trade on Webull as well for some of my larger accounts or larger positions that I want, just depending on what season it is. Okay. So you can do the same thing roughly on Robinhood Legend. You can see my setup is pretty much the same. Okay. Alrighty. On the screen here, we have our 200 daily moving average. We also have our 20 daily moving average. Okay. If we're above both of these and we see some of a bullish cross right there, we are bullish. Okay. So if we're above the 200-day on a daily, that is a long-term strength bullish signal, as well as the 20-day, which gives us kind of a more of a short-term signal that we are still bullish in the short term. Okay. So if you can see here going back, we rode this 200-day moving average. Once we got back above, this is in 2023 of October, and we were riding it and we were riding it and we were riding it. We're significantly above that 200, and then we're just riding the wave of the 20. Okay. So you can see what happened when I told everyone going into like April, or excuse me, the beginning of this year, we were starting to cross back underneath. Okay. And you can see where that kind of cross divergence was. And we had that propelling motion to the downside. Now we have reclaimed, and we're still holding. Okay. So intraday, we can trade both sides, right? We can trade puts, calls. If you're in futures, you can trade sells or buys. Okay. But primarily, if you were to ask someone right now or ask myself, Brian, are we going to have a big pullback and fall back into this gap and fill the gap? Is this going to be a top tick up here? Right. That's why I haven't been staying in my puts very long. And also I've been a little bit cautious of what we're doing up in here. Okay. So my Leverage University members, clients, understand that I haven't been as active in putting a lot of size on my trades, or in general, been very interested in this motion here personally, because we're still in this kind of chop zone area. So when you're analyzing the markets, you want significant room to your respective targets. Okay. So you see how close we are to the all-time highs. We're roughly about 5 to 8 points if you're counting, the all-time highs being around 611.39. Okay. So around, just say 5 to 10 points. All right. So from a bullish stance, yes, we are bullish, but from a risk to reward stance, meaning how much more room do I really have to hold a call position without a pullback or a significant hold over multiple weeks above previous high consolidation. All right. So let me summarize that in a box here and show you. I think that's been working very well for folks. So you can see there, we were in this consolidation box between 583.55 and 595.15. Okay. So that is a bullish consolidation move, right? Trapped some bears down below, ripped us right back up into the box. And now we have broken above the box. Okay. So I know a lot of times I talk about gaps and gap fills, and anytime we gap up, it's going to fill the gap to the downside. We don't necessarily know when that gap is going to get filled if we're strong or weak in the significant, area. We still have to watch our levels. So as much as I'm interested in this big gap fill down here, it's probably going to have a catalyst. So I'll draw some ideas here that you can see what it might look like. All right. So this is important for analysis when you're trying to game plan the week on where you're going or what type of trade you should be taking. So technically, this zone right here is okay to trade in if you're comfortable trading from the top of the range to the middle of the range to the bottom of the range. Okay. If we stay up here above 595.15, we are technically still bullish. It would look something like this. Okay. So what I like to do is I like to turn my alerts on. You can see these alerts that are on, and I wanted to see some alerts kind of below some levels, below some key levels, kind of give me some notifications to let me know that it's getting close to that level. Okay. So I think this is a little bit much here. So I want to give me a notification roughly around below 597. Okay. Knowing that we are a little bit weak, but we're also approaching that 595 level. Just in case I step away from my computer, I know what is going to happen, or give me enough time to react based on how it's approaching that level if we do have a pullback this week. Okay. So that is from a daily time frame. If you've watched my how to read a stock chart video, if you haven't, make sure you check that out at some point. It's a really good video that will allow you to learn better on these Stock Sermon Sundays. It's on the channel. You want to analyze candle analysis. So I'm on a daily time frame here, and this candle is signaling just a simple consolidation candle, because an equal high wick to the top and an equal high wick to the bottom. The body of the candle is right in the middle of those two wicks, which is showcasing that it's not decisive on which way it wants to go. Okay. Yes, there's bullish strength to the upside. You can see a nice pullback, higher low, higher low, higher high, and another higher high. So if we pull back in some retrospect to 525, that would technically be right on that trend line for another higher low. Higher low, higher low, higher low. Okay. So in the back of my mind, we have to do a top-down analysis to understand that when we get intraday, meaning when I go down these time frames, it's going to look a little bit different. You're going to be like, man, there's a big gap. It could fall back and whatnot. But we got to remember the bigger time frame movement. And I even struggle with that sometimes, knowing that I could catch a quick scalp, but I can't stay in that scalp for too long because of the range that we're in. Right. So on the top end, if we break above 601, we kind of have some blue sky territory, as it's called, break above this new high into roughly around 605. Okay. And then we've got another blue sky territory back to all-time highs. So I would look for this next level being 2605 if we are continuously bullish to the upside. Just say CPI is good, or just say wholesale inventories is good tomorrow, right? We do have another channel that we have broken out into, which is right here. If I go to my left back in 2024, okay, the end of last year, this is where we broke above and we set in this range. And you see that range is right above 672. Just say 601. So do you see this candle here? It went from 601. Look to my right. I know some people are still learning the charts. Maybe that price is to the right. So if I scroll that cursor up, that candle right there goes all the way up to 604.11. Okay. So there's that next channel that we're in. And that's how you get to understand, okay, if we're above 601 and we close a strong, just say 15 to 30 minute candle above 601, that's probably what I'd want to see a little bit more, is above 601 on a bigger time frame intraday during that trading day. If we're above 601 and we're holding throughout the remainder of the day, I really don't want, I always say on my channel, I have people that have really gotten acclimated to some puts sometimes, right? They've started to learn the put game, the downside game, but I would not try to short above 601 until we get to the top end of the range, right? So I would flip the sentiment to know that you have room for about a $3 to $4 room, and you could trade those calls up with a stop loss back below 600. Okay. Now I'm doing a full top-down analysis from SPY first, and then we'll speed it up and go to this core list. So you have to understand what's going on with SPY and QQQ. I'll even touch on IWM, right, to give us a sentiment of the market. So what does that say? If we get above 601, I can trade some of the strong names. Probably I can look at Google, which is very strong. It's at the top of my list. It's building strength, I should say, right? Palantir, yeah, okay. NVIDIA, maybe breaking above that 144 range. So I can trade those strong names to the upside. So I've seen on Twitter and other places that some people maybe have got trapped over the past couple of weeks saying, man, NVIDIA is going to 150, right? Trade calls to NVIDIA above, to 150. I'm just going to buy 150 calls and go. And it's been chopping around, right? That is because SPY has not really taken off above that 600 just yet. So it doesn't give NVIDIA the opportunity to take off to 150, right? So if SPY is still stuck underneath that 600 or that 599 level, it's going to be very difficult for some of those stocks to really catapult, okay? So if you see 601, the market's strong, then you're going to get that continuation from your strong stocks that you want to trade or that you want to the upside for your shares. Okay. If we stay underneath this level, okay, then we have the opportunity to come back down to 595. All right. So I'm going to go into my 4-hour time frame. Let's do analysis here. I'm going to get rid of some of these zones right now. I'll mark that 595 one more time. 595.15. I call that just our, as we call it, like our do or die zone, or kind of our hold zone that we must hold above 595.15. Okay. So if I'm going into this analysis here, now I'm on a 4-hour time frame. You see these top wicks that are starting to come in, right? That is showing that a little bit of exhaustion is coming in, a little bit of, I wouldn't say profit taking or heavy selling, but just a little bit of exhaustion, a little bit of lack of momentum of bulls trying to continue it up. Okay. So that's also giving me a signal that we could pull back into some of these levels down below, kind of like what we called last week. I think we called this one last week, roughly right here. This, hey, be careful of a big pullback off 600, right, to 597, or a big pullback like this back down to the lows. Okay. So we could see another one that gives a pullback back in that 595 or potentially 596. Okay. If I go into my hourly time frame, we can see it a little bit clearer here that we do have a gap to fill to the downside, which is what we were trying to get to fully fill on Friday. Okay. So you see how bullish of strength that we have, that we stopped and filled only half the gap right here from that gap up on Friday. Okay. From NFP. So this gap, right, will probably most likely get filled this week. Will it be tomorrow? Will it be Tuesday? Will it be for CPI? We don't know yet. Okay. But it might chop around here. It might try to go a little bit higher to retest the highs at 671, try to get above that 601. So I will say for my members inside of Leverage, and you saw this movement on Friday, you may have been frustrated, right? Most of us took our profits, but we're thinking that potentially this gap is going to eventually get filled and we come back down and test that 595, right? So we don't want to get too antsy unless we start seeing some weakness and some lower highs that form. And maybe we could scalp it back down again, kind of taking the same idea, but putting more time on the contract. Maybe Wednesday, Thursday, or even Friday, SPY put contracts if we decide to trade SPY. Okay. ES, same thing. If you're trading futures, I can go over some of those levels if y'all request in the chat. Okay. Let me check the chat really quick. I've been going for a minute. Looking at Palantir short 121, 10 VIR. Yes, I like that same idea. So we're going to get to that core list in a second. Appreciate everyone joining in. I see some new viewers that are coming in, so I appreciate y'all. All right. So that's what I'm looking for. I'm looking for this gap to kind of close to retest 595. Now, the key thing is, what do we do? And also, I treat my stock sermon Sundays a little bit different than maybe others, where I do kind of teach and answer questions on here. So if you do have any questions from a teaching perspective, I'm more than welcome to answer as best as possible while you've got me live here. Okay. So Brian, what's the game plan? Like, what do you do here? You either take calls, ideally above 601, and you can take it up to 604 or 605 if you trade SPY. Okay. Still putting more time on the contract. So I would say if you trade SPY, try to choose Wednesday, Thursday, Friday contracts if it does happen on Monday. Okay. Just be safe this week. Give you more time for your contracts. If you do trade further than that, that's great as well. If we're below 601 and we're chopping above 598 to 601, it's just kind of a consolidation zone, right? 598, just say 598.50, 598.50, just kind of chopping around. Okay. So you want to get back below. If you're scalping or day trading, or you want to, trade intraday and it's SPY, you want to see a pivot point, would be this 598.71. Okay. That would get you a little bit of weakness below there, below 598. And then we should test 596. And then we should test 595. Okay. So all in this zone, kind of choppy, but I do expect a pullback. All right. So that's how you trade that. At 595 is going to be your interest level. 594 to 595. That is going to be the level this week that we want to watch. That is going to be a level that I am very interested in of what we do around. like I told some of you and I told my members in leverage, I don't get interested unless it's at close to the level that has some big move coming. Okay. So above 601, cool, I'm interested. Below 590, 598, maybe interested for a little short down below. At 595, I'm interested at what it does. What does it do at 595? Does it come down here, fill that gap, reclaim 595, get back above? Okay. And that's the reaction that bulls are trying to do. They're trying to do that. Okay. So I'm interested at what it does at 595. Even if it ticks down and fills the full gap and then reclaims it. Okay. If I see buyers at 595 and it ticks up like that, I'm like, it's not going any lower right now. Very similar to what it did here. Tick down below, reclaimed back above, and shot back to the highs. Okay. So 595 is going to be your interest level where you want to turn on your alerts and say, let me know when SPY is below 596. Then you can come to your charts. You can get interested in what it does there. Now, Brian, what if it has a drastic move? For some reason, we get down into 593 like that, and then we just hold underneath this 594. And it just looks weak. It's no momentum, right? That is technically a bearish consolidation to come down back into those lows, and it looks something like that. Okay. So you see how I'm interested around 595, whether the market is weak or strong, depending on what it does. Okay. Ideally, we're in a bull market. Got to remember that. So don't get trapped down here, which I have to tell myself. Anything I'm telling you, I'm telling myself. Don't get trapped down here saying, man, big red candle's coming back down. Let me short it. If it's at 595, be patient. If you can catch it down to 595, cool. Maybe a $3 move on SPY or whatever respective stock. Cool. Right? If it gets underneath and we're kind of waiting patiently, again, as a reminder, if it consolidates, sits underneath, I see it at 594. I see it's all day sitting underneath 593. It starts to get weak. Okay, cool. 590, 591. All right. Wrapping this SPY analysis up here. Brian, where is I think we're gonna need a catalyst, but when is this gonna come into play? Like when potentially we're gonna get a deep pullback versus kind of this grind and grind and grind and grind and grind. I'd get more concerned if we fall back below 589. Okay. And we kind of close a day underneath there. It would look something like this. Okay. If I get some type of day or a big move kind of down like that, I'd be a little bit more potentially bearish that we could have something that comes in and we start forming lower highs. Okay. So there is a big move coming at some point. We don't know if this is going to happen or this pullback is going to happen towards the fall time, maybe when the 90-day pause of tariffs is off or when that T word comes back in heavy with President Trump. But we know a lot's going on with ICE over in LA for my West Coast people. We know a lot of folks getting riled up, right? So it's interesting to see how economic news is affecting the markets or potentially could affect the market. So this gap will get filled. And we know that August, September, October time is a little bit more bearish in nature. Elon, right? Elon did say or did proclaim that a recession is coming the second half of the year. And I don't listen to any kind of political ploy or whatever they're talking about. I look at the charts and I'm like, well, if he's telling the truth, I could see that. All this is just a rebound into the summer, which is technically a bullish time for the market. May, June, July, come in, something like that. I could see it, right? But I think we need a catalyst, right? Earnings are going to have to be horrible. Microsoft's going to have some kind of major news, whatever it is. NVIDIA is going to have some type of major news where Jung says something about their chips or something like that. So you've seen the black swan events up until this point that can happen, that can propel the market one way or the other. So I really think it's going to be more of a black swan event that's going to come in and send us back down to fill at least that first gap. Very similar to how the black swan event of Trump stepping into office, everyone thought it was going to be bullish. Tariff news came in, black swan event, sit us back down. Okay. So can't predict those, but it's getting a little bit, exhausted up here at the highs, and we got to see if it's going to take it out or we get rejected again. All right. That was a long SPY analysis, but it was much needed. Everybody good? Can I give him a 1 in the chat? Appreciate you, Tanvir. Everybody give me a 1 in the chat if you're good on our SPY analysis. And I won't go as extensive in QQQ because the levels are, the sentiment and the concept is essentially the same, but I'll go over the levels for sure because I know a lot of people look at more the NASDAQ, Qs, obviously our tech sector. The Fed started to inject liquidity in the bonds market to reduce the percentage rate. Secretary of Bessent announcement Treasury purchased $10 billion of short-dated government bonds. They plan to continue. This may eschew the equities market to push up immediately, and then market may chop around till Powell's rate decision next week. Yes, you're absolutely right. I love it, Tanvir. Meanwhile, Tanvir is over here asking for a discount. It's always cool. If y'all didn't know, like, why traders or, investors like myself or whatnot, have communities. So essentially it's better to have or trade with a community, or at least have ideas that you can bounce ideas off of, even if you trade or invest by yourself, right? It's not, at least not for me. It's not a cash grab. It's just my time that's been given. Right. So I think that's really the reason why personally, the good people or the good ones that are doing it, have a community. It's because it's valuable to trade with people, or invest, with ideas that people want to share. Just like what Tanvir just did. You want to see if, your sentiment or your ideas are correlating with what you're thinking, because we get in our heads. All right. Let's go into QQQ. All right. Daily analysis here on Qs. Let's go into my iPad. That's why it's going over. Okay, there we go. Okay, stop it. Close this down. There we go. All right, Qs have pretty much approached their highs. As you can see, I said last week that the Qs were obviously a little bit stronger. The NASDAQ a little bit stronger, with Microsoft pushing new all-time highs. NVIDIA still sitting up in a bullish consolidation. We have Palantir still strong. We have Google that's building some strength. Apple still fairly weak right now. Amazon building some strength. So you have those, AVGO being a leader. So you have that strength coming in the NASDAQ and the Qs. And we have reached kind of our first profit target, or our first heavy resistance level at 533. If you remember last week and intra week, I said 531 to 533. That is going to be our first big level that we've got to clear above, and we hit it right on the nose. Okay, so let me know down below if you remember that as saying, yeah, I remember 533. You told us that last week, whatnot. So we have hit the Q's top end short-term resistance. Okay, so if we were looking at this from a daily time frame, it's still strong, but again, showing a little bit of exhaustion. If we go to the left here, we can see some big rejection that came in right around this 533 and pull back on this daily candle to about 527. Okay. So that is a level of support that we are looking at, which is around 527 in the short term, which is right at the bottom of that daily candle wick. Okay. So 527, 528 is a level of short-term support. Okay. The big level of support we talked about last week, if y'all remember, we talked about this 523. As long as we're above 523, it's kind of like that roughly that 595 on SPY. Okay. Obviously it's a little bit stronger. If you want to see it from a visual standpoint here, here's that box right there. You can see how more significant QQQ went above the box. So this is how SPY would look if SPY reached above kind of that 601 into 605, big rejection. So this is kind of how it would look here. And Qs reached it first. Okay. So what I've been doing to give me a sentiment on the market is paying attention closely to what QQQ or the NASDAQ is doing primarily, and then watching how SPY is either lagging behind or reacting. Okay. So we need QQQ to break ideally above 533. And I think that would catapult 601 plus on SPY. All right. So very similar to what Tanvir just said. We've got a little bit of consolidation. People may be waiting on the rate decision to send it higher. Maybe CPI, PPI can give us one direction or the other in the short term. But I think a lot of consolidation is going to be continuing to happen over the next week and a half, roughly 6 to 7 days. Okay. Remember, that's June 18th date for Fed Powell coming in next week. All right. So the big range here, ideally, is you'd want to trade off of these levels: 533, 531, maybe underneath this 528. You can take a little short scalp down into 525. Okay. And then you want to trade a lot bigger, closer to 523 and 524. So if you are a person that trades both ways, puts and calls, sells and buys, you'd want to consider that this is top end resistance, lower highs forming on a 1 hour time frame, and you could look at this continuation back down, something like that. Okay. Closer to this 531 and 533, because you have stop losses that it can clearly be set. In the middle of this range, again, might scalp it a little bit, but don't know if it's going to bounce and go back up. Just be careful in the middle. And then you might want to get interested again if it falls down here, consolidates, and then wants to retest the high again. All right. So the title of this, again, if you looked at the title of our topic tonight, A+ setups. Okay. A+ setups. For me, to keep it simple, A+ setups are trading off of very key levels where I know there's buyers and sellers present. So I'd want to consider trading off of this 523 to 525 area. That $2 range, 523 to 525. If it's not there, be patient. Okay. Scalping in the middle of this yellow line is in the middle of a zone, and you could scalp it in the middle of here, but it gets a little ugly or choppy up in this range. I want to consider an A+ setup to pay attention to what it does at 531 and 533. If I see that it's lowering and can come off this level, I can trade puts off closer to that level and test it. Stop loss above the highs, or let it fall all the way back down to 523, 525, see what it does there. Does it hold? Okay, I consider that. Take it back up. If it falls below 522, okay, if it falls below that range and breaks a new low, then I consider that I could take it back down into 520, 518, and we're back in this chop zone range, and you just look left. All right. So there's many other terms for A+ setups, different ideas that you can have. I can make a whole separate video about that, but the key is trading off of those key levels, and you'll be a lot more successful, whether it is calls or puts, intraday. Okay. All righty. Questions on Qs? Thoughts on Qs? Questions on Qs? Yep. I love that. He's got 514 puts for this week. I can definitely see that. I've at least got the first gap filling. So if he's looking at weekly puts, okay, Tanvir, he's looking for a downside. Okay. If he's got 514 puts, very cheap down here, 80, 90 bucks. If he's got on weeklies, you can let us know the contracts that you've got, Tanvir, if you want. This is why we need you in the community, Tanvir. We're going to have some fun, man. I got you, man. I got you. Cool. All righty. Let's go to IWM. IWM on a daily. We've got it approaching kind of this 200-day moving average here. I talked about this pivot point from IWM. This could be an inverse head and shoulders forming here, potentially, as there's a rotation maybe in the market. Okay. So as the market for SPY and QQQ, IWM or small caps have been lagging just slightly, and I may want to look at IWM up into this 213 and 215 area. When it gets to 215, I want to be a little bit more cautious of what it does at 215, because I'll show you on Google what that looks like in a second. How does it react to this 200 daily moving average? Remember what I said about those moving averages. Gets above 1, cool, bullish in the short term. There's the 20-day. Gets above the second one on a daily. That is where buyers are heavily present if it gets above that area. Okay, then we've got, potentially back up to 230, back up to 225, things of that nature. Okay. However, seeing the broad market is a little bit more iffy in the short term, and depending on how the rates come in, right? I'm not convinced just yet on IWM if it's taking off back to highs until it clears back above 216. Okay. So IWM, look at that weekly candle, very strong there above that moving average, and on a daily, kind of forming somewhat of a daily hammer candle. All right. So as long as IWM is above 210, I would say just kind of mark it at 211 just to be sure. But as long as if it ticks back and then reclaims 211, right, we're rotating back up, take out a new high, 212, and you could trend to 214, 215. Okay. So watch out for IWM, because it is, again, I get very interested if it's moving above or it is approaching key levels. So if I can't catch it and it's already up towards 215, I may be interested to see how it reacts off of there. That is where that tariff drop was, and see if it breaks above, or I can trade puts because I can have a stop loss and roll it right back down. Okay. I know we have a gap right here. Okay. But remember, this is bullish consolidation and we closed above. Okay. So you see that bullish consolidation right there, broke above. And if we break above this 212.13, break above a new high, I would not try to step in front of that, other than maybe have a little bit of call continuation for a little scalp up a couple bucks. Okay. If you're not interested in that trade, I would wait till it gets closer to the 214, 215 area. Okay. If it's not pulling back and it just grinds and you can't catch it, then I would wait till it gets closer to 214.50, 215. Okay. Awesome. So I'll be watching IWM very closely, seeing that it's getting some breakout movement and some movement here off of this kind of inverse head and shoulders, that 200 reclaim. Nice bullish candle there, rotation, break above. Alrighty. Let's go into our core names here, and I'll come back to SMH. Google. Our Google trade from last week. Congrats to anyone who took that. I did take majority profits because I didn't want to hold anything into CPI and PPI. But here's the benefit again of being in a community that you trust. You can be a part of multiple, doesn't matter. But in our swing trades channel, I've been talking about this Google. Y'all probably getting pinged forever. Like, what in the world? So I've been talking about this Google, watching it like a hawk for the last week, just updating, getting the specific contracts, updating. And you can see right here, beautiful chart on Google above 166. There it is, bullish consolidation, rotate right on that trend line there, retesting the highs. And we've got some potentially 180 targets in sight. Okay. So Google starting to build up some serious strength here. Again, I think long-term, if you're a share buying person, Google is on a significant discount, anywhere between 150 and 170. Anywhere between 150 and 170, Google is a great buy, in my opinion, for 200 plus on Google. All right, let's go on a daily. You can see this kind of rotation curling motion here. Also, you may look at it as a little sloppy, but somewhat of a maybe inverse head and shoulders kind of formation there. And again, this is what I was meaning before on IWM. Do you see this above this daily, how it rocket shipped off of that daily 200 moving average and some bullish momentum came in? That is the reasoning why. One of the reasons bulls said, cool, above that 171.20, we're going to step in, push it up to a new high of 174. All right. So it's going to be very interesting here on Google this week of what it does, because you want a pullback to get the best entry if we are going to try to trade Google this week. So if I can get a pullback, again, I'm bullish on Google as long as it's above that 166 in the short term. Okay, above this 166 right there, kind of above that neckline, is still a higher low. Okay. So even if we get another deep pullback and it can't go just yet, and it pulls back deep into there, I could scalp it down to there, but I want to understand in the long term, okay, Google's pulling back, but it's still bullish. Google's pulling back, it's still bullish, okay? If it gets below 165, that's where I'll get a little bit more, okay, cool, this has a deeper pullback, all right? So if I get a pullback on Google, kind of keep your alerts on. If we can catch the scalp to the downside to fill this gap, great. If not, I'm really considering more of I want to take longer calls out, right, to August or whatnot, or build up more shares or whatever it is on Google, because I think Google personally is ready for some type of kind of NVIDIA takeoff, maybe into the next earnings, something like that. All right, if it can get back above that 180 mark, 182 mark, I think that's really the first target. As you see, I'm pushing right up into that kind of 180, 182 level, kind of like what it did over here. Okay, so look out for Google. We'll watch it this week inside of leverage. Above 174 is really where you want it to mount above, get above 174. 177 is where the takeoff will be to 180. Okay. Above 177, if we see Google above 177, it's going to 180. It's going to 182.5, 183. All right. So above 177 is where Google will start to squeeze up into that 180 plus. Okay. But it's got to start. I don't really like the entry here anywhere in this trap zone. 175, pull back, 174, pull back, 172, pull back. So got to have a pullback if we decide to trade it up, or I would like one. Or if I can get a trend break, I can scalp it back down like this. Okay. All right. So hopefully that makes sense on your charts. It may not come all the way back down to 166. So mark 168 on your charts as well as a nice support range for Google. All right. I'm going to get to some of the top, like one of my top A+ setups I'm kind of watching for this week. I'm not sure which direction it's going to go necessarily, but it could have a big move coming. And I know people are getting bullish again on altcoins, and Bitcoin is kind of, building up some strength again. So it's kind of iffy on the direction, but Coinbase, let me see what Bitcoin's doing right now. Okay. Kind of broke trend a little bit, and maybe this is a little retest. There's that trend right there. Broke trend, lower highs. And maybe this is a little bit of a head and shoulders potentially in the short term to come back to that $100,000 level, and then maybe 95. We'll see. But it's still forming higher lows and building strength. All right. So there's still buyers. The reason I'm saying that is because on Coinbase, there could be a big move, kind of like what Tesla did potentially, but I think it's going to need some type of catalyst. All right. Coinbase on a daily chart. Okay. Let me get rid of some of this and draw it out. Coinbase on a daily chart. And I'll get to your Palantir, Tanvir as well, because that one's a little bit interesting too. All right. When I was analyzing Coinbase, I was looking at this inverse head and shoulders that took off above the neckline, which was right at 209.76. Just say 210 for good measure. Broke out, squeezed up to the highs, roughly just underneath 280. All right. Now, it's kind of consolidating and wondering if it's going to start building strength back to the upside. Okay. But with the broad market or SPY, since now Coinbase is included in the S&P 500, if SPY pulls back and potentially Bitcoin and it pulls back a little bit, crypto, people are taking their profits and whatnot, then Coinbase, is this an opportunity for somewhat of a head and shoulders, big kind of bearish engulfing candle there, a little bit of a hanging man doji on a daily, and can we get some type of movement down to fill this gap? Okay. Talked about this recently, very similar to Tesla. Doesn't that look almost identical somewhat? It was sitting up here, head and shoulders. People are looking for it to hold, break out. It broke down with a catalyst, filled the full gap, plus some. Okay. So Coinbase, kind of getting interested in. And when I get interested, I get real antsy. I start wanting to enter immediately because I want the perfect entry. I want the full move, right? But that typically resorts sometimes in a big move, but also it resorts in a, potentially early kind of quick loss if I enter too early, right? So I want to watch this 255 level. I want to watch 250, right? Because that's a big psych level. So I already have my alerts. If you see here, these little alerts here, I want to know if it gets underneath that 250, right? But ideally, if it breaks underneath this 240, put your alerts on for maybe 238.50. Underneath that 240, we've got nothing but room into 230. And by that time, if we hold underneath 240, I mean, we got half the gap that can close down into 220 and potentially 212. Okay. So am looking at Coinbase, very interested. You can see what it's doing here. Very interesting level. Again, sitting right on that daily 20 moving average. So if it gets weak underneath that daily 20 moving average for a new day, underneath there, maybe closes the day tomorrow underneath it, something like that, I might be a little bit more interested. But we got CPI and PPI, they just screw the whole thing up. So you get my frustration sometimes with data coming in. But that gap is really interesting. It's almost worth it because the risk to reward contracts I'll be looking at or that I was scanning is automatically looking into next week and maybe looking towards that 220, right? They're sitting right at, 230, 220. They're sitting right at about $100, $200 for those contracts, potentially get some movement further out. You don't have to have them necessarily in the money, but for 70, 80, 90, 100, $200, depending on your risk tolerance, I mean, those contracts could move pretty well if there's a big move coming. So just kind of put those on your radar. But if we reclaim 260 and we reverse and get back above 260, then we've got retesting of the highs. So that's kind of, if it does this, all right, then I'll be patient. So I don't have to top ticket necessarily, but Coinbase, I do kind of want those contracts. You can see here, there is a little bit of a gap that needs to be closed there. So if I were to look at this, I would say this is more of a bearish flag right there to maybe retest those lows. All right. So break below 250. There is a gap down to 245 and then potentially down into 242. So watch out for Coinbase this week and into next week, that there is potential for a big move coming soon. Just got to see what it does in this consolidation. Is it bullish consolidation or is it a little bit weak? All right. TSM, TSM also very interesting here because it is coming up into this level of interest. Okay. We got 208. There's a level of interest of that candle close right there and that candle close on that red candle. I'm looking right here. I'm looking right here. So we got this 207, 208 level that's sitting right there. That's very interesting. And we can see there's some reaction that's coming off of it. Now, this is a very bullish candle here, so I want to be mindful on a weekly. But if I go into a short-term daily and also a hourly candle, I can start to see a little bit of, if you all are familiar with formations, somewhat of maybe a rising wedge trend line. See, bullish strength, wedge, 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 wedge. If that trend breaks underneath that 204 and the market is fairly weak, or the semiconductor sector or Nvidia is pulling back, I may want to look at, potentially TSM to pull back to 200. It gets underneath 200. We have a gap fill. Okay. If you've never traded TSM or you're not too familiar, put it on your watch list every now and then. Kind of put it right next to Nvidia. Nvidia needs TSM. AMD needs TSM. It is the semiconductor manufacturer, so they need them to make the chips and manufacture the chips. Their contracts also move very well, and they're also, not very expensive for their big moves. So if you can see here, a couple of strikes out of the money, right in our wheelhouse, roughly around 150, sub $200, and even some sub $100. So again, if I looked at next week's contracts, potentially, if there's some type of pullback, you should see some interest that is starting to formulate on the put side more so right here for those pullbacks at some of those levels. So I will be keeping TSM on the side watch, as I love personally these little kind of pop consolidations. If I look at the RSI, starting to get up there as well on a daily. Okay. 4 hour looks like a little doji candle right there. You can see it touch right up in the 207, fall back underneath that 204, and then potentially could roll over or start, forming lower highs like that. All right. So put TSM on your watch. All right. Let's see. Palantir, move that up since Tanvir brought it up. I agree with I agree with your analysis, Tanvir. It's just, when is it going to happen? That's my thing. So I am thinking more of a kind of downside, bigger pullback for Palantir personally, and kind of shocking everybody trying to chase these highs, right? But that was a pretty big buy up or recovery from Palantir. But if we notice, that was just a buy up into a lower high. Okay. Remember when I say don't chase, look at this lower high that formed technically from a trend perspective, not necessarily on a candle close perspective, because that's technically a close right there. And then that's technically a close. So it's still higher lows and it's going up. Right. So in my, people that are a little bit more anal than I am, right? If I go into a 4 hour here, this is technically still a nice recovery back above that pivot level, which is 126. Okay. So 126 is kind of my pivot level of hold. That is our previous high, which is right over here. Okay. And that's why I moved it up. So that previous high, 125, it's marking 125.50 and some change. Okay. So above this yellow line, that's where it wanted to reclaim. And you can see it's back in this ugly consolidation channel. So when it's back in that channel, Tanvir, now it can rotate potentially to the high end of the channel and reject to the top of the highs, or fail back underneath that 125. And that's where we'll get that kind of rollover. So if you got time on your contracts, I do like the pullback, right? It would look something like this, kind of shock everybody and just start gradually profit taking coming back down. Okay. So on the downside, Tanvir, I do have, and for everybody else, I got that 115 as my first kind of big downside target. 115. Okay, 115 is that big first downside target that buyers would look to step right back in. As I think personally, if it fails back underneath that 125, gets back underneath 120, right? That's not a big enough level, in my opinion, to hold up, which is that 119. It's already touched it once, touched it twice. If it touches another one, another time, I personally think it's just going to break right through like that and create another lower low down to that 115. Okay. So, but I need to see the market a little bit weak. There are some gaps down below that need to be filled, some bigger gaps, as you can see right there. They got partially closed. And then obviously that big gap that comes back down. And then we've got our big pullback target, like I told everybody, back down into 96, 97. And again, how far it is above this 200 daily. Remember last time when SPY got up that far above the 200 daily, it's only inevitable that it comes back and tries to retest it. So here's SPY all the way above it, all the way above it, all the way above it. Eventually, some type of black swan event comes back and tries to retest that 200 daily moving average. Okay, and that's kind of what Palantir is looking like here. So that would definitely scare some folks if Palantir pulled back to 80, but it would not surprise me at all. Right? Would not surprise me at all that if it started to cool off towards the fall time and we pull back to their equal lows or something like that, 80, 90, or even right here at 97. And that would still present higher lows for my Palantir bulls where you can get a bigger dip buy pickup right there at that 97 to 100. Okay. So I agree with you, Tanvir. It's just when, not a matter of if necessarily. Like, when is that going to happen? Not a matter of if it's going to happen. There will be a pullback on Palantir. All right. Let's go into Amazon really quick. Amazon here, kind of this curling formation. This was the pivot point for Amazon. If you can see clear pivots, what happens above those pivot levels. This looks very similar for those that are trying to still learn the charts. That is similar to what I showed you on IWM. All right, see that pivot point that's right there where we couldn't get back above. It's like breaking into a new level. Breaks above, starts building the next floor, and starts moving to the next level. Okay, same thing is kind of happening on Amazon. As it broke above this 206.26, started mounting above it and started just trending and curling up to that next resistance level, which is right here at 215. Okay, so Amazon needs to mount above 216 to really get moving into 220 and back up to its all-time highs. Now, Amazon and Google are the sleepers. These are like no-brainers. People would say, what stocks would you buy and just hold and for forever and eternity necessarily? Amazon will be probably on the top. All right. Amazon would be the top. So Amazon being a little bit lagging behind the market, meaning it's not approached back to all-time highs because of the tariff news. But here's Microsoft. All right. So if you look at these coinciding charts, you can kind of see where they are and the possibilities of what it might do in the short term or whenever it's going to do it. This is where Amazon's kind of sitting right now. All right. This is Microsoft. All right. But if you erase this big push on earnings from Microsoft, it's kind of where Amazon is sitting right here until its next big push back to the highs, which will be inevitable. Okay. You can see right there. So Amazon's big pivot level was right above that 200 and then above that 206. So I'll mark that big pivot right there, and I'll mark the big pivot hold, which would be right here. So again, I understand that there's some gaps that some of you may see below and big pullbacks, but you got to look at the structure and the strength of the market first, like that. And to even touch some of these gaps down below, it's got to clear below that level and then break down below that level and then kind of stair step its way back down. But ultimately, you could see Amazon holding above the daily moving averages there, 220. It crossed, rotating, break above 216. I would say you've got, man, 220 and then back up to the highs. So any pullback on Amazon, put Amazon and Google on your watch list for any pullbacks. If we have like a red day or a pullback day or anything like that, those would be my top watches that really haven't taken off, like Meta and Microsoft and even Nvidia too. Like Nvidia is just it's pretty much all the way back to all-time highs. So you want plenty of room to take your stocks back up. If you're looking to trade them or if you want the best risk to reward. So Amazon, Google, top watches going into their earnings, which will be at the end of July. Okay. Put those on your watch. So if you have any focus for the remainder of the summer, I would say Amazon and Google primarily. I know everyone's Palantir and Nvidia, but they're already gone. Like you can squeeze a little bit more out. They're already gone. All right. Alrighty. Touch on Tesla. Everybody wants to know about Tesla, what to do with it. The analysis on Tesla. All right. Look at where Tesla is. Now that you're learning some of these moving averages here, you see that daily moving average, you broke below it, that daily 20. And look what happened on Friday. We rejected right at that daily 200 moving average. That is our big signal, right? The orange line on my charts is kind of the big signal of bullish or bearish, right? In the grand scheme of things. So if someone said, man, is Tesla going to rebound and go here? Yeah. If it gets back above 306 and then pushes back above 312, then you can get some bulls that'll step back in and squeeze it back up. So that's the proper analysis on it, is get back above that daily 200, squeeze back above 312. Great, go. Squeeze back up into 320, 330, 340, and even 350. Okay. So that is kind of the analysis on Tesla if someone were to be looking. So it is of interest down here. All right. But if it can't get back above, I want you to see what it did here. Look at it on this 1 hour time frame. When everyone was looking at potentially Tesla just taking off, any type of big move, I do not technically trade that stock that next day. It's a bunch of traps that set in. So if you missed this big move down on Tesla, maybe you caught a scalp back up, but people were looking for a squeeze on Friday. Man, buy the dip on Tesla, squeeze back up. And then it just chopped all day. Chop, 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 chop. And technically what you wanted to see on Tesla on Friday was it chop and then break above. That would have shown a little bit more bullish strength, but guess what it did? Rolled over at the end of the day. Okay. So that still tells me from a technical standpoint that Tesla may have just a little bit more downside in the short term. Okay. So mark that on your charts above 306, break of that trend right there. Move up to 310, above 312, you can start squeezing. Tesla breaks below 294. You can take it down into these 280s, back into 285, 283, and then 280. If we break below that 280, it can start, even having more selling coming in back down into these lows of 260s. Okay. So just monitor those levels in Tesla. It's a pretty clean chart right now. It'll tell you directional wise, but the big move's already made and they're trying to decide which way it's going to go. So they're probably just waiting on CPI, PPI, and then Powell. So get interested in Tesla. I'm more so thinking bullish here or a recovery at some point, but just don't know where the recovery is going to be. Is it going to be down here or is it going to reclaim and then we squeeze? All right. So I would think more so short-term recovery, bullish back to the upside on Tesla in the short term. All right. Let me check chat. Let me round this out. Now's the time for, on the 12th. Yep. Same analysis, Tanvir. Same analysis, agreed. 312 is kind of my pivot point, and then that 316 I'll be taking a look at as well. Yep. Buy the rumor, sell the news. So it could rip back up to the highs and then fail. We don't know. But yeah, Tesla event this week. Apple's also got its event this week as well. How we doing on time? Started at 4:15, about an hour and a half in. All right. So 20 more minutes left. Go ahead and ask any questions, thoughts, perspectives that you would like. If you haven't messaged myself about that 3-day free trial, go ahead and do that. I'll repeat that towards the end of our close. But yeah, appreciate y'all being here. Let's go over Apple and NVIDIA. So Apple is having some relative weakness on the market right now. You can see that it's getting rejected underneath this 206. So you want to turn some alerts on above 206. I'll get interested in Apple potentially to squeeze back up to retest this 215. Right. So I do not want to get too bearish or in the short term on Apple. It does have its developer event this week. So Apple could have a little short squeeze and trap some sellers thinking this is a bear flag back down. So I'll be watching 206.50 on Apple, 206.50 on Apple. Ideally, maybe push up into 207, retest 206, consolidate, and then I can squeeze it back up to 210 and then back up to 215. Okay, that is a top end range that Apple is looking to, break back into. We'll be back into something like that. Okay, so put that on your charts. If you're trading alone or if you're taking your own trades, it is okay. Like if I'm talking about these things, I'm trying to teach folks, you can take the trades that I take in the community if you're inside, but if you see it and I talked about it, be confident in taking your trade. Look at the charts and see there's nothing but room above 207.50. If we're above 208 on Apple, right? 210's your target. Take calls at 210. Take calls potentially, hold a runner to 214, 215 potentially. If you want to get this full gap fill and there's good news and we get some extremely bullish momentum above 215, you can take Apple calls out until August and take it through earnings. Maybe earnings rebounds Apple back. But yeah, it's going to have a good catalyst at some point. And Apple is kind of like Amazon and Google. So Apple, Amazon, Google are those lagging Mag 7 for right now. Okay. But in the short term, below 206, weak still. It's just chopping. My interest of levels above 206.50, below 200. All right, we could get that rotation back down. And then I could take it back down to there. I'll get interested at 195. Okay. So there's your big zone on Apple. Consolidation zone in here, 200 to 206. And then above 206.50, taking it up to 210, and then potentially 215. Let's see. Meta, just blue sky territory, just watching 700, not really interested. Personally, just absolutely bullish. I'm not even going to pull. I'm even talking about Netflix because it's just absolutely ridiculous. Okay. Netflix just crazy. Wait for a pullback and just not interested in trading it personally, but great, awesome, bullish. Microsoft, again, like I said at the beginning of the video, created new all-time highs, just slowly, steadily. Hadn't really been creating new opportunities. I was going to talk about this to one of my moderators in the community, James, that when everything's sleeping, I get interested. When it's grinding and grinding and grinding and grinding, we got all this room back to the downside potentially. It starts to pique my interest because the options are also very cheap. All right, so I'll do a separate video about that. I've already got it on my list this week. I'll talk about implied volatility as a specific topic on the channel. But look at this implied volatility at 15. That means the contracts are very inexpensive because no one's paying attention to it, right? While everyone is paying attention to Tesla, 70%. These contracts are pricey because everyone wants to trade Tesla. Everyone wants to trade it. But when the sleepers, right, Tesla's contracts were low before that big drop. Now everyone's coming to it. Oh man, Tesla. It's like you're late to the party already. And then you get chopped up or you're spending more than you should. Right. So Microsoft, from an options perspective, look at that implied volatility, even a couple of, weeks out, even into the earnings, like all the way out into July 18th, still 15%, 19%. You see how cheap the contracts are for Microsoft, which is a big major player in the market. I can go further out and say, shoot, man, if Microsoft wants to pull back, I can put some time on it potentially and get a cheap contract for Microsoft to have some big move coming up for $196 or $150 if Microsoft shocks everybody and pulls back $50, right? Which is going to be a tough testament, but you can see that it's starting to, it broke new all-time highs, but there's a lot of room back down, right? So that's when I get interested in some of these kind of big plays. That's how you find the big plays. You study the sleepers. What's no one talking about? What's been kind of like, it's not really moving. It's not really doing much, right? The Mercs, the NVOs, the UNHs. Everyone was interested until UNH. Okay, we'll get off of that, right? Lululemon. So Microsoft, very interested in it. Just kind of hard to say, man, I'm going to short Microsoft, but I'm kind of playing for that black swan event. And sometimes I do that as an options trader. I do take those chances to say, man, I'll risk $150 for a black swan event. I'll do that sometimes, but I'll still stay to my core of day trading, long-term investing, all that kind of stuff. Because if something crazy happens, right? Y'all know what happened with the Lilly trade. Same thing with Tesla. So take a look at it. Keep it on your watch. Don't let Microsoft go out of your back end. Turn some alerts on. I already got alerts on Microsoft. It would have to break back below this previous high here of 455. All right. 15 more minutes left. Robinhood. Everyone's interested on Robinhood. And if y'all want me to touch on CoreWeave and Apply Digital and those, just let me know down the chat. I don't trade those on a regular, and they have been moving, but I stick to my core list and I look at those when they decide to cool off and people start talking about it. Robinhood, it did not get included just yet into the S&P 500. That's why it is down 6%. Everyone was rooting for it. It was going to take off to 100 inclusion in the S&P. It is not just yet. So that is why it probably is down after hours. So I'm going to be watching Robinhood because it's probably going to have a lot of interest on it because people either bought too high and they were ready for a takeoff and now it's pulling back. So they may panic sell, right, for a pullback. So I'll be watching Robinhood back into this 68 to 67 zone. That was that previous kind of bullish consolidation retest. If you see right there, kind of that chop zone got above there, chopped in here, chopped in here, chopped in here. That was that breakout. So do we pull back into 67, 68? And I'll be watching kind of that $70 level where it is right now after hours. If it starts to get a little bit weaker, we could have a deeper pullback into 60, or if the market starts to pull back, if it drives deep under here, retest, right? We could have a deeper pullback into that $60 level. Okay. So watching Robinhood, it's going to have a lot of volume on it. My pivot zone is going to be right around 63. Okay. Right around 63 is could have a deeper pullback even into here, which would be an equal low to take back off. So Robinhood has been a big player in the market as of late. People have been trading it more specifically. People have been accumulating more. They've been innovating, and it is a great player. So it is sitting right in support. So we could look at Robinhood back to the upside. It is going to have a gap. All right. So that'll be a watch potentially tomorrow. But again, look at these contracts. Look at the implied volatility on them because everyone's eyeballs are on them. Look at the contract percentage implied volatility, 80, 90, 100%. All you need to know if you're a beginner is that the contracts are inflated, right? It's like you go for a launch of an event or whatever, and everyone wants the same shirt, everyone wants the same shoes. They start hiking the price, right? So I can still trade it, but I've got to know that these contracts are a little bit inflated. And would I rather trade something else that I can, get a better contract price for? Okay. The normal percentage price that you want, or excuse me, implied volatility that you want on a regular day trading basis is typically no more than 40%, right? Sometimes 50 is okay if it's a regular traded tech stock. Let me see what NVIDIA is. Yeah, 30%. So between 30, 40, 50%, it's not something that I check on a regular basis. But if everyone's talking about it, it's all on Twitter, it's all on this, it's all on that, I'll check it, right? I'll check it because I don't want to get caught up in spending more and then it deflates and then I've spent more than I should. That makes sense for everybody? Let's go into these white ones at the end. These are kind of like my swing trade, like bigger upside moves, right? The kind of moves that you can put the contracts in, hold for 2, 3, 4, 5 months. And I've got some more than this, but you're gonna have to join Leverage University to see more. So these are just on my watch for right now. But Merck, very interesting here, and the whole healthcare sector in general. Merck, interesting right here, previous highs at 75, breaking back above the 79 and starting to form a little bit of a consolidation, bullish consolidation, rotation here. Nice hammer candle on a weekly. Potentially a breakout above 80. We can get moving to 85. We can get moving to 95. We can get moving to 100 if it has a catalyst and there's some good news behind it as well. Okay, so keep Merck on your watch. Contracts, I'm not going to go too deep into it, but the contracts I'm looking for are, at least for right now, June 8th, at the beginning of June. I'm kind of, if I want a bigger swing trade, I don't want to really worry about it. I'm looking more towards August 15th, September contracts in the short term. You can look towards January contracts if you want to be even safer, right? Leaps, not potentially. Yeah, you could. The further the better. I'm just telling you the short swing trade contracts I'm looking at right now are August 15th contracts if you want to be safe for some of these bigger moves that you want to just chill throughout the summer. So if I'm looking at August 15th, I'm looking at maybe 85. I could spend $200. They're already moving, as you can see. That'd be $250. Set it for the summer. I know it's probably most likely going to hit 85 based on my analysis. Okay. NVO. Okay. It's got earnings coming up. Okay. Earnings coming up. Also a healthcare stock. If you don't know, which people didn't even know, I do have a background in healthcare. The doctorate is real, folks. Okay. Pharmacist. Okay. Full doctorate in pharmacy. Pharmacist. All right. So for those that are like, why does everybody call him doc? It is a pharmacist. Okay. So healthcare sector, I am very familiar with. August 6th is the date. So if I want to take it through August 6th and just say, again, like I talked about in earnings, this could be a nice, there's some gaps up to at least 85. And we've got a movement back up potentially to 100 on NVO. If I look at it on a monthly, look how that looks right there. Previous highs, bullish momentum coming off of there. There is some moving average. There are some moving averages above. If I look on the daily, it is above that daily 20. Where's the next target? 92. There's that daily 200. Gets above that daily 200, 100 plus coming in. All right. So if I go out to August 15th minimally, I've already done my analysis. I look at those strike prices already moving right now. There we go. 85, under $300 for a big swing trade. Not bad at all. You can take it through earnings potentially. If I go into September, probably even more. All right. If I think that 90 targets in play, right, I could spend, again, look at that implied volatility. Very cheap right now. No one's paying attention to it, right? They'll start picking up if it takes off and it's like, man, did you see NVO? Like now contracts are going to be pricey. So you got to look at, if you're trading options, look at things that no one's talking about for the short term. No one's really talking about Google. They're starting to talk about it again, right? No one's really talking about Apple. They're starting to talk about it again. If this Apple developer event comes up, right? People are starting to move away from NVIDIA because NVIDIA is not moving anymore, right? So that's kind of how I treat it and why I don't talk about the hype stocks a lot of times, because it's already made the move. You aren't already in, okay? So NVO, UNH, same thing. Contracts getting cheaper here. Analysis, look at that daily 20 right above that 310 mark, gets above 310. I think short-term target 400 in sight personally, is consolidating above 290. I still am a little concerned that if the market pulls back, but It's holding well. It's been holding well for, uh, a couple of weeks here, right after its earnings. So there's 1 week, 2 weeks, 3 weeks holding above that 290. All right, if it can start building some upside momentum above that daily 20 and above 314, right? I think get some squeeze back up into 330, above 340. We got gap fill close to 380. UNH can move in a hurry. So whereas its earnings, typically it makes these big moves heading into earnings. So this makes sense, right? This makes sense. Earnings is on the 29th. Okay. So when people talk about me and myself, if you don't know, inside the university, we do trainings, we do kind of like master classes intra week. So if you want to learn, myself and one of my moderators inside the community, James, right, we talked about this. This is what we call easy money. You just might have to spend a little bit more money. So if you don't want to day trade, if you're not a day trader, if you don't have time, this is how options can be beneficial. You watch for beaten down things, right? You watch for, earnings that may come up. It's already beaten down enough. How much more can it get beaten down through another earnings season? Probably not much. It's probably going to recover with the next earning. They're probably going to boost it up. Hey, we're doing better. We fixed some things, and it takes off back to 400 plus. Okay. So that's my expectation. So if that is July 29th, I'm looking at the August 15th. And if I think personally 400 to 450s in sight, okay, that August 15th already moving here. As you can see, they're already moving and they're fairly inexpensive. They're normalized. So that 400 is $300. So let me show you. I do this, for any one-on-one clients or anybody typically. Well, how much would that be if that went up that far? Right? If that gap fills or partially fills up to 400 anytime soon, there's the gap right there. Here's the contract price right now. All right. That gap would close and it would be roughly around $1,500 to $2,000. Okay. Mind you, theta decay, all that kind of stuff, but $300 to $2,000. Right. Depending on how quickly it moves, the more time on your contract, the safer the trade. So if I know it's going to 400 at some point sometime soon, then I may put a little bit more, confidence in it and may look at the July 18th, right? May get some movement there. But if I want to be a little bit more, it's a little safer, I would say minimally August 15th, and then September timeframe would be even safer there for the short term. So I would keep your eye on the 400 target. You can, if you're comfortable, go above that and whatnot. But if you go above, 400 calls, I would definitely put more time on it. I was even looking at January, right? January 2026 was even taking it through the holidays, things like that. Obviously, they're more pricey, but if I could, if it makes a big move and potentially goes past 400, you can look at the 430s, maybe the 500s, something like that, and get some movement. All right, there is a lot of upside potential, but it does have some things to get through first. Obviously, the first retest would be back above that 430. Can't talk about 500 until it gets back above that 430. Cool. Lululemon. All right, Lululemon. If y'all, you may not, okay, and this will be my last thing because we're at the top of the hour. So I went through all the watch lists. If you got any final questions, the time is now to ask. I don't know about y'all, but a certain subgroup of folks are not going to stop shopping at Lululemon. Just because you aren't spending $110, $120 on yoga pants does not mean Lululemon is going any less anytime soon about their revenue and people shopping there. Okay. That's my analysis a lot of times is just because you don't, right? Like, oh, no one's spending any money there. I wouldn't do that. Does not mean Lululemon is going out of business anytime soon. This tariff news will, pan out. They will figure it out. Things of that nature. I know it's in retail. I know it's, somewhat affected by the tariffs, obviously, with the price point and whatnot. But in the short term, Lululemon, in my opinion, has been a great performer over the long run. And then it just had a little consolidation and started to have a little downside. Okay. So I want to be a little bit more cautious because of the sector it's in, but I don't want to be overly, opinionated that, oh man, Lululemon is not going to recover. This is bad. This is bad. This is bad. Right. Same thing with UNH. When they start telling you that, they start picking up the dip and ripping it right back up. Okay. So I'm interested in Lululemon if it can get back above 270 first. Okay. Because I wanted it to really drop down into the 240s and 250s. It just did not do it. That's what we were looking for. I was like, man, continue a little bit lower, continue a little bit lower. I'm really interested at 245, 250 level to squeeze back up. So I want to be a little bit more cautious here that it may be a little bit of an early entry if we get right there, if that is more of a bearish consolidation and it comes down lower, but it's oversold tremendously on an RSI. Look at this 1 hour. It's at 14. Okay. Let me show you what it did last time. It was at 14 on an hourly. When was it last this low on an hourly? Right here. April. Yeah. Tariffs dropped all the way down to 240, ripped right back up to 260, and then ripped back up to 270. Okay. Eventually set right here, then ripped up to 280, almost 300. So yeah, it is possible for it to bounce $40, $50, $60. Okay. So am interested, still got to be a little bit more patient about what it does here, because I'm glad I didn't trade it on Friday because this was ugly personally. So I'll just keep my eye on it. I've got my alerts on. I'm going to watch it and see. I'll watch it how it finishes out through the day. If there's any bullish strength or bearish candles or whatever it might be, just kind of keep it on your side watch. Again, when's the next earnings on Lululemon? Let's watch where that is. And then I'm done. Let's see. When's their summer earnings typically? Okay. I think there's going to be some buying. I mean, summertime, people spend money on retail, money they don't have to. People spend money on retail. 8/29/2024. Okay, cool. So end of August. So if I look at Lululemon, I'll go into September, trying to take it through their earnings, give it enough time, or take it up to earnings. Contracts, again, cheap, inexpensive, have cooled down, right? So I would look at potentially, I really just want 300. I want 300. I think Lululemon can recover more than that, but I really just want to kind of target 300. So those are the contracts I'm looking at. I don't want to pay $1,200 personally. I'll maybe look at the August 15th. And sometimes if it's too pricey or I don't like it, I don't want to put that much risk on, then I don't do it personally, but I may look at something else. 300. I don't think $500 is bad for a swing trade. I like $300 to $500 personally for me. I like grabbing a couple of contracts, typically minimally 2, just so I can sell one, hold one. Other people just like grabbing one. That's my contract price selection wise. So if I wanted 2 of these, it would cost over $1,000. Not bad, but yeah, I typically want 2 to 3 minimally on swing trades. So I can trim. July 18th. I think that's a little soon personally, but those aren't badly priced. Those could move potentially, but it's got to get moving quick. It's only a month out. So I'll keep a look at it, but I do think that August 15th minimally is going to be the date we need to take a look at. August 15th. Alrighty. August 15th, Apple. And what if Apple just has some kind of crazy news and just pops up to 220 very quickly? Look how cheap these contracts are for Apple 225s, $300, and Apple has some good news or something. Crazy. September, right through their earnings. Their earnings is good. because I haven't personally, and this is after hours talk. I'm done. I'll check the chat, but personally, I haven't been as good, just transparently about getting contracts TGT oversold. Oh yeah, I agree. I haven't been as good about getting those contracts for trading, more specifically shares. Yes, you can buy up shares of your favorite stock leading into their earnings, especially if they're beaten down, but grabbing those contracts leading into earnings, like Microsoft, right? Like Microsoft was beaten down leading into the last earnings, right? Beaten down, leading into the last earnings, had opportunities to get contracts very cheap, right? And just took off. Right. So I haven't been very good at that because I trade typically around earnings, after earnings. Right. But what if Apple just comes out of the woodworks for earnings and does a Microsoft? I don't want to predict or a crystal ball or anything, but it looks like Microsoft did before the last earnings season. So I don't know, but it's looking real interested in contracts, but you got to be patient. Like you gotta be patient because you're spending for options more specifically. And I can talk about futures too, but you're spending, $300, $250, and you're trying to target, a big move from Apple leading, after their earnings or into their earnings, right? Maybe there's some good news, some good catalysts, things of that nature, right? Amazon, same thing, right? All the way into August 15th. Amazon does have Amazon Prime Day for the summer, things like that. So Amazon makes a big move. Google, same thing, into their next earnings. They killed their last earnings, right? So they had a really good last earnings. So Google all the way out until August 15th, right? Trying to target that 190 and stuff like that. Like July 18th is another good date for Google, right? Google makes a big move. I mean, you could look at, July 18th dates for short-term trading right now. They're still fairly inexpensive, 20%. So, all right. What's going on, Des? How are you, man? How are you? Let me read these and CRWV, looking at PFV, mRNA. Yep. Love mRNA. Pfizer. I've been looking at Pfizer for years. NOV or even NVO. Yeah, what I talked about, NVO. Are you talking about NOV? Cool. There's so much I can talk about. TGT is oversold for the week, month, and 200 MA. I agree. I told folks about Target. Yeah, lots of Nancy men with yoga tights. Yeah, MVO. Yep, talked about that. I think I mentioned it. TGT. We're just chatting here. So if y'all got to run, that's great. And I understand, as an African-American male, as a person that is also a business owner, I've been around some of the thought leaders and business owners, African-American females and male creators and business owners that unfortunately got shysted, DEI, things of that nature. If y'all didn't know, I did used to work for Target as a pharmacist, pharmacy intern. That was my first internship for pharmacy, right before they switched to CVS. So I know Target very, very well. And I understand it's hard for some folks to separate themselves, and they will say, Brian, don't even talk about Target. I get it. I haven't had anybody say that directly to me yet, but I understand that I am speaking on a public platform. So people's emotions come in and whatnot. But if we're just talking specifically from an investor stance, Target's chart, You can people can boycott all they want, but eventually it will phase. I'm just saying that there's a dent being made right now with negative news against Target, people not shopping there, people not going there, people having strong opinions about their DEI movement. Okay. So I get it. But from if I were to say, if this was not TGT in any other chart, I'd be like, load up. But because emotions are involved, people get opinionated. So if you can take your emotions out of it and kind of say, man, do I want to participate or do I not want to participate? If you don't, that's cool. But Target will be back to the upside. It's inevitable. They will be back minimally, in my opinion, at least 50% from here. So at least back to 150. In options, that's a pretty big move. Shares, if someone loaded up, just say someone loaded up 10,000 shares of Target at $97. All right? 10,000 shares of Target at $97. They put $1 million in. Probably easy money. So the market makers are going to win regardless. There's too much money. Okay? From a technical perspective, the technicals are showing a recovery back to the upside. Okay? So you're hitting Target in the short term based on not spending, but it'll be right back up to 125. Very similar to how everyone was like, I'm not flying Boeing. I'm not going on any type of Boeing plane. There's crashing. Great. Cool. They bought it up at 135, back up 50%. So if you can take your emotions out of it, put Target on your watch. If you want to move to a different sector, I think Dollar General, like we called it there, great move. Dollar Tree, also another good one. If you want to participate in like the Walmart, the Dollar Tree, Dollar General, if you want to support that in that sector versus Target, those are still great charts. So giving people other options. All right. So don't mean to bring things in here, but I have to be aware. I'm very socially aware. All right. Because I don't just do stuff other than trade and invest. I'm a life coach as well. All right. So Target, great looking chart there. Failure to go lower, higher low there. Bullish momentum coming off that 95. Area of interest right there at 97. Look what it did at 97, went right to 130. So Target, great looking chart there, personally. So if I were to look at it, for anyone who doesn't care, like, Brian, give me the play. Look at Target's options contracts for in the money coming up. I mean, you can go all the way out to September, fairly cheap. You can go all the way out to January, potentially. Yeah, still fairly cheap because no one's paying attention to it. $400 for Target. These are going to move. If that goes back to 120, you can go even further out. Right? October. Right? 115. Yeah. They're already moving. They're up 25% already. All right. So, we good? My biggest issue is cutting trades too early. Cool. Great questions. Last coming in. Final questions. What type of tickers do you trade? Large cap, small cap, options? Great question. So for me, I trade primarily large cap. My core list are typically the Mag 7. My core lists are typically the Mag 7. So I'll show you the ones that I trade on a regular basis are right here. Amazon, Nvidia, Apple. I put Palantir into there. So just look up the Mag 7. I don't have to go through it here primarily, but large cap. I do not really trade small cap companies. Number one, why? If someone asks me a reasoning, it's because the spread on options personally is just, I don't trade penny stocks either. I don't like having hype stocks. I don't like to have them up one day, 500% and then back down. I'm not really interested in that. I'd rather just have more consistency. and I primarily trade options. I know, people talk about equities, futures. I primarily trade options, but I do trade in the futures market as well. And the way I trade in the futures market is through TopOne Futures. Okay, TopOne Futures. And also, I look at SPY and QQQ to get my levels a little bit better on the futures market sometimes. Does that answer your question there? My biggest issue is cutting trades too early, not getting it 2-to-1, 5-to-1, even 10-to-1 risk to reward. So first of all, I think 5-to-1 and 10-to-1 risk to reward, right? That is really good. Like shooting for that on a regular basis, most traders are shooting for minimally 2-to-1, 3-to-1 if you're a day trader or scalper. 5-to-1, 10-to-1 risk to reward are typically runners, or if you're having a really big swing trade, right? Really big swing trade. So I would give yourself maybe a little bit of grace, right? Mag 8, yeah. I'll give yourself a little bit of grace, and I'm just, not knowing who you are or whatnot, or how long you've been trading. I'm just kind of, open-ended answering your question. I'll give yourself a little bit of grace on the 5-to-1 and 10-to-1 risk to reward, like the Tesla trade that just happened. Like if you were trading that on a regular, your runner would have ran, but if you are confident in that gap fill, you could have taken it, and you're talking about, risk to reward well over 10 to 1. So I would say shoot for 2-to-1, and 3-to-1. For those that don't know what he is talking about, or she, I'm pretty sure it's a he based on the NASCAR All Out, but don't want to assume. For those that don't know, if I am trading a options contract more specifically that costs $100, a 1-to-1 trade would be I'm risking that $100, right? And I'm making one-to-1 of it. So I'm trying to make $100 off of that trade. Okay. A 2-to-1 is I'm trying to make $200 risk to reward on that trade. Okay. Now, if you're talking about risk percentages, just say he's risking, because there's two different ways people look at it or different traders look at it. If I have a $100 contract, okay, and I'm risking 30%, that means I'm risking $30 and I'm looking for a 1-to-1. That means I'm trying to make $30. I'm risking $30, 30% of 100, $30. So if it goes below, $70 contract, I'm out. Then I'm trying to make $30. That's a 1-to-1. So he's like, man, I put $100 in, I made $30. I'm just talking on the low end because I'm not sure how much contracts, but you get the gist. So a 2-to-1 would be I'm risking 30%, trying to make 60. So I want that contract to be bought at $100, go to $160 per contract, because I'm willing to risk 30% and I'm looking for that 2-to-1. Okay. Now, when he's talking about a 5-to-1, right? If I'm risking 30%, okay, I spent $100 on the contract, I'm risking 30%, and he's looking for a 5-to-1. Then he's looking for $150, right? So he's looking for that contract to essentially go 150%, that one contract. So when I'm talking about like a 5-to-1 trade or, those bigger trades, typically those are runners for most traders, depending on, what type of trader they are. That's their runner size that are going to that 5-to-1, 6-to-1, 7-to-1 for options perspective, right? If it's futures that he's trading, and that's a different story, right? You can get those bigger risk to reward trades, obviously, if you're risking $500 in futures and you make, 2,000 plus, right? So on and so forth. Am I answering the question right? NASCAR all out. Am I answering the question right? Or am I getting to your answer that you're looking for? Hopefully. So if you're looking for a suggestion, I would say, depending on what you're trading, kind of just lower the expectations just a little bit and let the runners run to those higher targets versus a full So it would be putting on a little bit more size. So if it's options and you're like, man, I want to get that 5-to-1, that 10-to-1 risk to reward. I want that big trade. I want that $100 contract in options to go to 150 and, turn $100 into 150, stuff like that. Yeah, you can do that, but that put on more size. So if you're trading, just say 5 contracts, right? And you're cutting it too early, or you're like, man, I'm only getting 20%. I'm only getting 15%. Well, if you had $1,000 in the trade and you get 20%, that's a quick $200, right? So that's at least the way that I teach my clients or students or members is we don't, if you notice, yeah, that was great. I trade primarily small caps, get it within 10% of the previous day close off PR drops. And some of the tickers run to, okay, gotcha. So if you're trading small caps, then yeah, and you're trading equity of the small caps, not options. Are you trading equity of small caps? Okay, gotcha. So let me know really quick. And if y'all like this if y'all like this kind of mini little session, that's cool. Y'all can stay around and kind of hear how I answer questions. I'll share my screen back and forth. Okay, so he's trading equity. So for those that don't know what that means shares. So he's trading shares. So if he's trading small cap shares, right, he's trying to get bigger moves from those, small caps that you see run from $4 to $10 or from, 50 cents to $3, things like that. So it's tough if you have to put more money into it and leave runners, but because of the volatility, that's probably why you're getting stopped out. That's just my suggestion. I don't really trade small caps like that, but when I see small cap traders, they're typically is so volatile that they don't want to take a losing trade that's already green. So I would just say that trust your analysis a little bit more, right? And if you do have a little bit more size, then you can hold those runners a little bit longer and widen your stops. So that if it comes back to your, underneath your stop loss, that you're still in profit. So I think there would be more size on the trade that would be necessary to take that full like move personally. Yep. These are the questions I love to answer, right? For those that are still learning or still listening in, the recording, these are the questions that you will get to start improving your trading, which I think why it's, important for traders in general, beginner, intermediate, advanced, to have discussions like this on these public platforms, because everyone's trying to improve their strategy. You could be green, but it's like, man, I want to be more green. What should I tweak this week? Let's see if we need more questions, thoughts, perspectives. Dennis had a good question. All right, Dennis had a really good question, and I wanted to pose it to the group if Dennis is still in here. He was asking about like how to trade futures a little bit better, because futures are a little bit different than options. And I'm going to stick, for simplicity's sake, I want to stick on the same platform. So I'm going to stick on my Webull platform here. And I want to show you a suggestion on how to trade futures a little bit better intraday. Okay. So with futures, we know that there's no expiration date necessarily, right? There's no theta decay, I should say, for any futures traders that are a little bit more technical and want to get my definitions right. There's no theta decay. It doesn't decay. The contract doesn't decay when you enter it, right? So if I want to trade futures a little bit better, I want to go into a 5-minute and a 15-minute time frame, but I want to analyze on a larger time frame. Okay. So if I look here and see on ES, okay, ES are the futures of the S&P. SPY, okay, is the ETF of it. Okay. So if I analyze this here, I know that it is bullish, right? It's above all these moving averages. So Dennis says we were talking about on Friday, if you're trying to top ticket and things like that, or trade against the trend in futures, it becomes a little bit more difficult in the futures market sometimes, because your stop losses get hit because the momentum is going in one direction or the other. So what I've kind of been testing out in the back end and been a little bit quiet in the community about my futures trading is actually just trusting the trend that it's on and just trading if it's above pre-market high. Okay, so I'll mark it on SPY. I'll also mark it on QQQ, and I'll mark it for in futures. It'll be the London session or about 15 minutes to 30 minutes into the pre-market session. So I'll market that pre-market high and pre-market low. So if I go into the 15-minute time frame and I see where the market opened here, right? Right, or is Friday the 6th? Market open. I'm on the West Coast, so this is 6:30. Market open right here. Okay. So I want to mark this pre-market session, which will be right here. Okay. So this is the market open candle right there. So this is happening pre-market in the futures market right here when we did have NFP. So NFP was strong. We boosted above, and this would technically be the pre-market low right there. Okay. Let me widen this up a little bit. It's probably not a good example because we had, so I want you to look at those yellow lines. This is the pre-market session right here. Technically it would be, down here at 59.70. And then you got roughly just say 59.98. Okay. Or 6,000 just to be certain. If it's above this pre-market move, right, it is bullish for the day. So every dip, I know I'm on a 15-minute, every dip is getting bought, every dip is getting bought, and just strength up to the upside because it's above the pre-market move. Okay. And it's going to retest or come back towards that pre-market. But as long as it's above that pre-market push or that pre-market move, it is going to be strong. So if you're trying to short it or top ticket, or you think it's a little bit overextended, or we have a big gap right here, right, low liquidity, then we've got to let it break back below, or it's got to get back below some of these lows and get back into this gap to be certain on the futures market, because it's a lot more volatile. Obviously, one full ES contract is massive. Even if you do micros, right, you're getting stop out very quickly. So I've just been trading with the trend more specifically on futures versus in options. On SPY, I was a little bit more comfortable, right? Or we're a little bit more comfortable seeing SPY. See, this is, now you see the charts next to each other. There's the futures move. And then the market opens up for options, opens up right here, pushes up. But you see, we're not really getting that. It just consolidates. It's not getting that massive pullback that we wanted. But because the S&P ETF SPY is not as volatile as a full ES or a micro ES contract, I can stay in those put contracts a little bit longer, right? So while I'm in puts, right, I was a little bit more hesitant, if you're listening, Dennis, to kind of wait on that big drop to come. I'd rather just wait on the break of the pre-market session and then take that push down for momentum. So my trading is a little bit different sometimes when I'm on options versus my strategies sometimes on futures, right? And I've just been testing that out a little bit more because it's so much more volatile that I'd be comfortable holding this. I was down, I think Dreama and Trent, if you were in here, we were down 15, maximum 20% on that contract. And then it went to 40%, right? So yeah, it's a little bit different strategy. So that's what I would suggest on futures. That's just my 2 cents. If I have any other futures traders on here, you're more than welcome. But if it's above pre-markets session, trade the buys or trade calls up. If it's below pre-market session, then you can trade that momentum to the downside. Okay. So that's been working as of late. All right. I wasn't even sharing. Was I sharing there? Jeez, y'all are like, what are you sharing, dude? Was I even sharing my screen? Man, I don't even think I was sharing the screen, folks. But there you go. There's that pre-market session. There's that push, buys, momentum back down. And there's the SPY look. Push, same look. Everybody good? We good? We good? We good? Any final questions, thoughts, perspectives? Thoughts, perspectives? All right. Don't forget to DM or message myself on Twitter or IG if you want that free trial for 3 days inside of Leverage University. We'd love to have you in there. We've got our bigger trade ideas. It is beginner friendly. So if you know nothing, if you don't know how to set up a brokerage, if you don't know how to enter options contract, if you only buy shares, that's cool too. People think it's only with day trading. No, we have people that buy shares and just hold shares and also equity trade. We have different sections for that as well. Okay, so we'd love to have you. You don't have to. You can stay on here. That's why I over deliver here, because I just want to give as much value as possible. So we have different sections here, as you can see. So if you're only in shares and leaps and you only trade equities, I do have a small cap section as well. So small accounts, large accounts, we do share it there. And then shares, if you just want to buy shares, if you don't want to know what the next big Robinhood is, or the next big Palantir or whatever, we are analyzing that. If you're a swing trader, right? If you're someone that's too busy, or you just want to spend a little bit more money, take 2 to 3, 4 months to play out. We do have a lot of good swing traders inside the community, myself included, where we're putting those ideas out. And then day trade signals for those that want to scalp or make intraday money or weekly money. I do call those out, and then the trade ideas and planning those out as well, giving you structures and levels. Okay. So love to have you in there. We do have a lot more as well. So if you're a Leverage University member, you get all these other chats as well. Our crypto hub, Bitcoin levels, we do that as well, where they're going, full levels analysis on Bitcoin, altcoins, where those are going. They're organized into threads. So I've got my ETH, Sol, XRP, Bonk, Pepe, Cardano, Doge. A lot of people have questions about all these other things. Okay. This is an entrepreneurial group as well. So my university section, okay, trading trainings for the trading section, all the trainings. If you want trade reviews, I do trade reviews here. Any trades that we've taken, do a full review over how we made money on that trade, so you can learn. If you are just setting up, you can go all the way back to the beginning of this section, trading trainings, and there is the trading trainings, navigating Robinhood, introduction to options, analyzing the trade there, introduction to charting. Understanding gaps in stocks, when to enter a trade position, understanding the change in direction, candle structure, Webull setup, position sizing, right? So I know all these could be YouTube videos, but that's the benefit of me trying to like give more into the community. You get it? So I only give so much on YouTube sometimes, where I really want people to learn and I can interact with you a little bit more. Okay. My business trainings, all those other things, and then my one-on-one clients and my syndicate mastermind clients are at the high level, talking about business, life, mindset, all those kind of things. So thank y'all so much. Peace, love, and blessings to you. I will see y'all this week, throughout the week. And until next time, share this out with anybody, friends, family. If this is helping you at all, please comment down below. Would love to hear from you. And yeah, we'll talk soon. All right, have a great week.